You know that moment when you realize your money just made more money than you did this month? It sounds unreal, but that's exactly what happens once you hit certain net worth milestones. There are three specific points in your financial journey where everything changes, not just the numbers in your account, but the way your money behaves. These are the moments when wealth stops being something you chase and becomes something that quietly builds itself. But here's the thing, most people never reach them, not because they can't, but because the early part of the journey feels so painfully slow that they give up before the magic begins. In this video, we'll break down the three net worth milestones that change everything, what they mean, what happens when you hit them, and how they completely shift your relationship with money. By the end of this, you'll understand why the people who seem lucky with money often just had the patience to let the math play out. Welcome back to the Wealth Guide. If you've ever wondered when your money actually starts working for you, this is your answer. We're going to talk about the three turning points on your wealth building path that completely redefine how your finances feel and function. Because in the beginning, wealth building feels like watching paint dry, slow, repetitive, sometimes frustrating. You're saving, investing, doing the right things, but it barely seems to move. And then, seemingly out of nowhere, it all takes off. But that takeoff isn't random. It happens at specific thresholds that can actually be measured. So let's start by understanding why these milestones exist in the first place. The nature of wealth growth. Here's the biggest misconception about money. People think wealth grows in a straight line. You put in effort, you save, you invest, and your balance goes up predictably. But real wealth doesn't grow like that. It grows exponentially. And that's the part our brains struggle with. In the beginning, compounding feels almost useless. You're putting in money month after month, and the progress looks tiny. But over time, the returns you earn start generating their own returns. And that's when things start to explode. It's like rolling a small snowball at the top of a mountain. At first, it's slow and awkward. The ball barely grows and it feels like you're doing all the work. But as it rolls downhill, it picks up snow faster and faster until it becomes unstoppable. That's how wealth works. And on this journey, there are three clear moments where you can feel that acceleration, where the math begins to shift in your favor and your effort starts paying back in multiples. Each of these milestones isn't just a number, then it's a psychological shift. Your relationship with money changes, your level of security changes, and most importantly, your sense of control changes. So let's start with the first one. The milestone that's deceptively small, but arguably the hardest and most important to reach. The first milestone, $100,000. You'll often hear seasoned investors say, the first $100,000 is the hardest. And they're right. Painfully right. Because this first milestone isn't just a number, it's a test of patience, discipline, and belief. See, the early years of building wealth feel brutally slow. You're saving diligently, investing what you can, and yet your account barely moves. You're doing everything right, but it still feels like nothing's happening. That's because in the beginning, your contributions are doing all the heavy lifting, not your returns. It's just your hard-earned money being stacked, bit by bit with very little help from compound growth. But here's where most people misunderstand the process. They assume that $100,000 is only 1/10 of the way to $1 million. So they think, if it took me 8 years to make this, it'll take me 80 years to make $1 million. And that's the mental trap that causes so many to give up before the compounding even begins to work. The reality is completely different. Wealth doesn't grow in a straight, predictable line. It grows exponentially. Let's put this into perspective. Suppose you invest $500 every month, which is about $125 per week. That's skipping a few takeouts or cutting a few minor expenses. You invest that money consistently in a low-cost index fund or ETF, earning around 7% per year, which, by the way, is a realistic long-term average. Now, here's the part that frustrates almost everyone. It'll take you about 7 years and 9 months to reach your first $100,000. That's nearly 8 years. 8 years of watching small, slow growth and wondering if it's even worth it. During that time, you would have contributed roughly $46,000 of your own money. The remaining $54,000, that came from your investments growing on their own. Half of your first $100,000 came from compound growth. That's the first quiet miracle of wealth building. You reach a point where your money finally starts helping you. Now, here's what makes this milestone so psychologically powerful. Once you see that your money can grow without your constant input, it changes your entire relationship with saving and investing. Before this, it's all discipline and sacrifice. After this, it becomes exciting. You stop thinking like a consumer and start thinking like an investor. When you see that even a small market gain, say 10%, adds another $10,000 to your portfolio, something clicks. You realize that time is finally on your side, and this is where everything changes mentally. The first $100,000 is built on grit, not growth. It's built on saying no to unnecessary spending, staying consistent when it feels pointless, and believing in a process you can't yet see working. That's why, even though it's just $100,000, it's the hardest money you'll ever make. Because you're fighting not just the math, but your own doubts. Think of it like pushing a car. At first, it barely moves. You're using all your strength and it feels impossible. But the moment you get it rolling, momentum takes over. That's what $100,000 represents. It's the moment when the car finally moves on its own. Because after this milestone, something incredible happens. Your returns start working faster than your contributions. Let me show you what I mean. It takes nearly 8 years to make your first, but to reach your second $100,000, to go from $100,000 to $200,000, it only takes about 5 more years. That's a massive shift. You doubled your money in almost half the time. Why? Because now your investments are big enough to generate growth on their own. You've built a base, a snowball large enough to start rolling downhill without constant pushing. At this point, even if you stop increasing your contributions, the compound growth will accelerate faster each year. So if you're still in that early phase, saving what feels like tiny amounts, watching the numbers crawl, don't underestimate what you're doing. Every month of consistent effort, every small deposit, every dollar you don't spend, it's all building the foundation of that $100,000. You're not failing. You're just in the invisible part of the process that no one talks about. Because compounding doesn't look like it's working until it suddenly does. That first $100,000 isn't about being rich. It's about proving to yourself that you can do it. It's the confidence checkpoint. The moment where you stop wondering if it works and start realizing how well it works. After that, your mindset shifts forever. You stop chasing instant gratification and start chasing growth. Because now you've seen how the math rewards patience. And from here on out, the game changes completely. Your net worth starts moving faster. Your money begins compounding more efficiently. And the next milestone starts to come into view. The one where your portfolio finally feels alive, growing faster than you can keep up with. That's where we're headed next. The second milestone, $650,000, when money starts working for you. When you cross the first milestone of $100,000, something subtle but powerful begins. Momentum. But when you reach around $650,000 in net worth, that momentum becomes visible. It's no longer just a graph curving upwards. It's a shift in how your life feels. This is the point where your money begins to generate meaningful income on its own. Not symbolic, not theoretical, real income that could actually cover your living expenses. At this stage, compound growth doesn't just feel encouraging, and it feels liberating. Let's put this into perspective. With a $650,000 portfolio, Even a modest 8% annual return gives you about $52,000 a year in pure investment income. That's not just a side benefit, that's a full-time salary. And the beauty of it is, you didn't have to trade a single extra hour for it. You didn't work overtime. You didn't grind more. Your money did the work. This is the first time your financial position starts to breathe on its own. You could, if you wanted, take a break, and your wealth would still quietly grow in the background. And what's fascinating about this stage is how it changes your psychology. Money stops being this source of anxiety or scarcity and becomes something that feels stable and secure. You're no longer thinking, what if I lose my job? Or how will I afford that bill? Because now, even if something goes wrong, you have time, real time, to make choices calmly. When your money starts earning like an employee, your relationship with work changes too. You stop working purely for survival and start working for purpose, creativity, or freedom. You can finally ask yourself, what kind of life do I actually want? Not, how do I make it to next month? That's the psychological unlock of the second milestone. But getting here takes time and consistency. Let's look at the math for a moment. To grow from $100,000 to $650,000 while continuing to invest that same $500 a month at a 7% return, it takes about 16 years. That might sound long, but remember, it took nearly 8 years just to make the first $100,000. And now you've added $500,000 more in roughly double that time. So you're already moving exponentially faster. The truth is, by the time you hit $650,000, most of the growth isn't coming from your contributions anymore. In fact, your investments are now outpacing your savings dramatically. It's like your financial snowball has finally reached the slope, and it's rolling down the hill on its own. Now, the emotional part of this milestone is something people don't talk about enough. When you start seeing your investments earn more in a year than your entire annual savings, it creates a sense of awe and disbelief. You check your portfolio and realize your money just made $40,000 in a good year. That's a number that once took you 12 months of hard work to earn. That's when you realize you've crossed into a different game entirely. The wealth you're building is no longer fragile. You've gone from being dependent on your job to being supported by your assets. It's the first taste of financial independence, even if you're not fully retired yet. But it's not just about numbers. It's about how this changes your daily life. When you're at this stage, your stress levels start to drop. You no longer see every unexpected expense as a crisis. You can say no to toxic workplaces or to people and situations that drain you. Because you have the most valuable thing money can buy: options. That's what real wealth is. It's not fancy cars or luxury brands. It's waking up and knowing you have choices. And that freedom brings an enormous sense of peace. You no longer feel like you're constantly swimming against the current. You're finally flowing with it. At this point, your financial life transforms from survival to strategy. You start thinking differently. How can I preserve this wealth? How can I make my money grow without unnecessary risk? How can I use this to buy time, not just things? This is also where people start exploring diversification. Maybe buying real estate, starting a small business, or focusing on passive income streams. Because you're no longer chasing money for security, you're building systems for freedom. Here's the irony, though. When people finally hit this milestone, many of them say something unexpected. I don't feel rich. And that's completely normal, because this stage isn't about feeling wealthy. It's about being safe. It's about having a cushion big enough to absorb life's uncertainties. You can lose a job and not panic. You can take a career break and still sleep well. That quiet confidence, that's what real wealth feels like. So when you hit around $650,000, something changes at a soul level. You stop seeing money as a finish line and start seeing it as a tool. a tool for peace, for time, and for autonomy. That's why I often say, if the first $100,000 is the hardest, the second milestone, around $650,000, is the most empowering. Because this is where you go from working for money to money working for you. And once you reach that stage, you're already standing on the threshold of something even more profound. The final milestone, the one that represents true financial freedom, both psychologically and practically. Let's talk about that next. The final milestone, $1 million when you become financially free. In mind, not just math. Let me tell you what really happens when you finally cross that magical seven-figure mark. Because this moment, hitting your first $1 million, is not what most people think it is. It's not just a bigger number on your investment app or a fancy status symbol. It's something far more profound. It's a psychological shift, a complete rewiring of how you think about money, security, and even your place in the world. When you reach that $1 million milestone, which, by the way, typically happens around year 29, if you've been investing just $500 per month with a 7% average annual return, something changes inside you. At first, it's pure relief. You can almost feel the years of sacrifice, the brown bag lunches, the used cars, the skipped vacations, finally paying off. You're not just seeing numbers grow anymore, you're seeing proof that patience and discipline actually work. It's like crossing the finish line of a marathon, where the prize isn't a medal, it's the ability to breathe easier for the rest of your life. You realize that you've done something extraordinary, not because you made millions overnight, but because you built wealth the slow, boring, and consistent way that almost no one has the patience for. Now, here's the funny thing. You probably won't feel rich, especially with inflation making $1 million feel closer to what $500,000 used to represent. But you will feel something deeper, validated. You'll know that financial independence isn't just for trust fund kids or crypto millionaires. You'll know that even as a regular person, earning an average salary, you can play the game and win. And that realization, it's empowering beyond words. Because once your first million is working for you, mostly invested, compounding, and generating passive income, something magical happens. You start to see possibilities everywhere. That idea you had about angel investing in startups? Suddenly, it's not a pipe dream. That plan to buy rental properties but never qualify for loans? Your net worth opens those doors now. You no longer see money as something scarce. You start seeing it as a tool, a force that can multiply itself if handled wisely. The fear of going broke while never disappearing completely becomes smaller, quieter, manageable. At this level, if your investments are well positioned, you can comfortably generate $40,000 to $50,000 per year in passive income, just from compounding, dividends, or safe withdrawal rates. That's money that flows whether you work or not. And knowing that even if everything else fell apart, you'd still be okay. That's a kind of peace of mind that's hard to describe unless you've lived it. Now, here's where things get really interesting. Some people hit that first million and they stop pushing. They coast. They think, I made it. I can relax now. And that's exactly where the divide begins. Between people who stay millionaires and people who go on to become multi-millionaires. Because the ones who truly understand wealth realize that hitting $1 million is not the end. It's graduation day. It's the beginning of the next phase. From this point on, the math gets ridiculous. In your favor. Think about it. To go from $1 million to $1.5 million, you only need a 50% increase. That can easily happen in a few good years of market performance. To go from $1 million to $2 million, that's just a doubling. Something the stock market has historically done every 7 to 10 years, depending on cycles. The leap from $2 million to $3 million only needs another 50% bump, And from $3 to $4 million, just 33%. Each million after the first becomes easier than the last. If you maintain the discipline that got you here, this is when wealthy people start thinking differently about time, about opportunity, about what money really represents. They see every dollar not as something to spend, but as a little worker that can go out and earn more dollars. They know that a $200 dinner doesn't just cost $200. It could cost several hundred more in lost growth over the next few decades. They don't become stingy. They become strategic. They start to measure purchases not in dollars, but in opportunity costs. Now, I know what you might be thinking. All right, this all sounds great. But what about market crashes? What if the economy tanks right when I need that money most? That's a fair concern, and exactly why diversification and conservative withdrawal rates are so critical. Because here's a secret most people never realize. Market downturns are not your enemy when you're a consistent long-term investor. They're your greatest ally. When markets crash, your regular contributions buy more shares. You're getting assets on sale. And when the markets eventually recover, and they always have historically, those extra shares skyrocket in value. That's how wealth quietly builds behind the scenes. The worst years for emotions often end up being the best years for your long-term returns. And that brings us full circle. When you look back, you'll see 3 tipping points that completely change your financial trajectory. $100,000. When compounding finally wakes up and starts working in your favor. $650,000. When your money begins to produce serious, meaningful passive income that gives you financial stability. $1 million. When you realize you've not only achieved financial freedom, but something even greater. Peace of mind. Because here's the truth. The math never lies. Even if it demands patience, our instant gratification culture rarely has. Start now. Stay consistent. 29 years from today, you'll either be thanking yourself or wondering what could have been. The bigger picture. So let's zoom out for a second. You've now seen the entire journey, from scraping together your first few $1,000s to watching your portfolio quietly grow into a 7-figure machine. It's not flashy, it's not instant, and it's definitely not the kind of story that gets 1 million likes on social media. But it's real. And that's what makes it so powerful. Because the truth is, wealth isn't built in a rush. It's built in rhythm, through small, consistent decisions that stack over time. The magic isn't in timing the market, it's in time in the market. It's not about finding the next big stock, it's about building the kind of mindset that doesn't panic when things dip or get greedy when things soar. When you look back on your journey, maybe decades from now, what'll stand out won't be the percentage returns or the fancy charts. It'll be the discipline, the quiet moments when you chose to stay the course instead of giving up, the months when you invested even when the world seemed uncertain. Those moments compound too, not in dollars, but in character. And that's what most people miss when they chase quick money. Because wealth, when done right, doesn't just change your net worth. It changes your relationship with time, fear, and even yourself. It teaches you patience. It humbles you when the market dips. It rewards you when you think long-term. And here's the most profound part. At some point in this journey, the focus stops being about money altogether. Once you've hit that financial stability, when your investments are growing on their own and your passive income covers your needs, you realize something strange. You were never really chasing money. You were chasing freedom. Freedom from worrying about the next bill. Freedom to say no to a job that drains your soul. Freedom to spend your days doing work that actually means something to you. And that's the real end game here. Not luxury, not status, not bragging rights, but freedom. The kind that lets you live on your own terms. Now, yes, this takes time. 20, even 30 years for most people. But here's the thing. that time is going to pass anyway. Whether you invest or not, 29 years from now will still arrive. The only difference is who you'll be when it does. Someone wishing they'd started sooner, or someone quietly smiling because they did. And that's the real power of this entire journey. You don't need to be a genius or make six figures or have some insider trick. You just need consistency, patience, and a willingness to stay boring when everyone else is chasing shiny distractions. Because that's how ordinary people build extraordinary lives. So start where you are. Keep showing up. And remember, the math might take decades, but the mindset shift starts today. If you found this video helpful and learned something new today, hit that like button. It really helps the channel grow. And if you want to keep learning how to build wealth step by step, subscribe and turn on the bell so you don't miss the next one. Thanks for watching, and I'll see you in the next video.